Okay, webinar is live. Let's see. Brett Hart, congratulations. You win the first in the room game today. I think that's the first time you've won it. Well done. Stephen, good to see you. John, Rob. Okay, brilliant. Warren, oh, busy. Mauricio. Let's get Mauricio. Let's get you moved. Okay, brilliant. I think whenever you're ready, Scott, we can begin.
Right. Morning, Maurizio. Morning, Ian. Morning, everyone. I'm going to start somewhere that I don't usually start today. We're going to start with the interest rates because this is the weekly chart of the interest rates. I use TNX as an approximation because it avoids me back adjusting futures charts, and we don't have back adjusted charts on TradingView, for those who know what that means. Anyway, the TNX is a nice approximation for the 10-year interest rate. So you can see COVID crash, rally, inflation getting out of control. And if we zoom back out, you can see this is 40 years of interest rate data. You can see this is the 70s. Inflation shock happened in 4 goes, actually. Every time they thought it was over, shit, it's happening again. And then they beat it. Interest rates have been going down for 40 years. Still, we just poked up above the previous high here. Now we're looking for a second. Now we're looking to close above it. If we poke, if we get definitively above here and go for a run, that really changes everything. Because the argument right now, there's two camps. One camp is that the interest rate rises so far have been successful enough, and the Fed should take the foot off the gas pedal and go back to the money printer, and we should do this. And the other camp is that, well, the Fed isn't in control anymore, and we're in an inflationary period, and it's going to keep going and going and going. The markets are betting very strongly that this is the thing, and the Fed is saying very strongly that this is the thing. The reason that the markets are betting that the Fed is lying is because the Fed has a track history of being a pussy and pussying out when things get hard, and this will be very hard indeed. So this is the one ring to rule them all for the next little while. So let's look first of all at what happened in equities this week. Equities had a down week, gap down, went down, and if we look at it on a daily chart, this was Friday. Jay Powell opened his mouth. We gapped down, tried to find support. Dip buyers stepped in, broke this high, got fucked. Some dip buyers stepped in, tried to hold the line, got fucked, closed at the lows. Fell down, dip buyers stepped in, tried to hold the line. Dip buyers have stepped in, tried to hold the line. Continuation of this little hammer candle gave them a sniff of victory, and they got fucked again. So what we see in context here is that 1, 2, 3, 4, 5 days in a row, dip buyers have tried to hold the line here, and every day they've gotten fucked. So if you imagine they're a fighter, every time they've stepped in, they get a punch in the face. Every time, punch, 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 punch. The bulls after this sort of price action are very weak. There's no, so what this is like a gradual bleed. There's no sign of a capitulation that would wipe all the bulls out, because you can see we've still got some bulls left. Like there's bulls left here, 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 but they're just so weak that anything they try isn't going to work. This looks very ugly for next week. And gap down, close at the lows, we can reasonably expect this to go down. Now, the big thing is we have two situations here. Does this happen? And then maybe, probably that. Or that's situation one. Situation two is We break this line, shit gets ugly, and we go to wherever we go, and that's probably a bottom, and then they turn the printer back on and go, oh, this is too hard, and then we do this. Those are very, very different outcomes. And so so I think those are the two highest probability outcomes, and there's others as well, but there's a high degree of uncertainty here about that. Maurizio, do you want to chime in with your thoughts on equity markets here and interest rates?
Well, I'll try my best, but yeah, I agree. I definitely agree, and especially, I definitely see. What I see is the sentiment is not there yet for a bull run. That's what I see overall. Like the sentiment of, you know, buying and holding and all that shit. That's what I think. You know what I mean in terms of sentiments.
Well, we're just talking about equities yet. We'll get to crypto in a minute.
No. I'm talking about equities. I'm talking about equities. I'm talking about equities, stocks. In terms of the sentiment of buying, like you know, like getting into stocks, right? Institutions and all that sort of stuff. I think that the feeling or the sentiment is not there yet to buy. Like everyone expecting for a lower low sort of deal.
Yeah, I'm with you on that. And you know, when you zoom out, you can see very clear change of character. Look how nice and smooth and orderly and small and neat and nice this move was. And then look how the character of it really changes from about here. See how it all goes big and jagged and up, down and higher volatility again. Like you can really see the different change in character. And this was when they had the first interest rate rise right here. So what we can see is that interest rates have the biggest influence on this shit, right? Okay, so let's move on. Let's look at, well, I'm just going to look at gold quickly because that's my jam. Fucking gold, kind of a thing.
Did you get stopped out?
No, I'm not stopped out. But I'm not a long way from being stopped out. My stop loss is at the. Let me show you. My stop loss.
18 months you've held this?
Oh, longer.
Ooh.
I get a shit ton of open profit in it too. My stop loss is at the yearly low, which is at the low of this candle, which is a very nice way to adjust discretionary trades. If you can get in a discretionary chart at the right time, you can. I had the stop at this low, then this low, and now this low, which is actually the right place. You can see if it hits that stop, I want to be out, right? So it's got to hold above this red line. Fuck all chance of doing that, really, truthfully.
Hey, Scott, so in terms of correlation between gold and stocks, right, or market, if the, all right, cool. Because obviously if gold breaks that low, then some stuff will happen definitely on the markets. Like it is a big low to break. It's a big low to break. So you can see the correlation swings. This is a market behaving like it ordinarily should. So up here is this is 100% correlation. This is 70%. You can see right now it's at no correlation. It's not a negative correlation. But this is what a market should be behaving like. If we see the same thing with Bitcoin, you can see we have periods where the correlation is much higher. But this correlation had dropped and now it's rising again. So now you can see that we're back to moving in lockstep this week with the stock market, right? Now, under what situations do markets move in lockstep with the stock market? Like, for example, they did here and here. When people are panicking, right? When, like, I don't know what you had for breakfast, but we all panicked together, right? Like we all ate the same thing. If we're in a burning building, fucking nothing. We ran for the exits. So
Bit too early to say, but this looks suspiciously like the start of another getting fucked period to me. So let's look at Bitcoin first. So tried to hold the line, dip buyers stepped in, dip buyers got fucked. Dip buyers stepped in, didn't break the previous high. Those dip buyers got fucked, new ones stepped in. This looked, I mean, this is a perfectly valid buy setup, right? Low, higher close, lower close, hammer candle, like in technical terms, this is, you've got a perfectly reasonable basis for thinking that, right? But look at what's happening every time people are getting into these buy setups, they're closing lower, so they're getting fucked. So we have a situation where buy setups aren't working. This is just looking very, very weak to me. And if we drop down to an hour so we can see it more clearly, we had a triangle that got right up to the tip. Now, this is exactly why triangles are the shittest pattern of all, and you should never really trade them unless you trade them very early. By the time they get to the tip, a triangle is a decreasing volatility trading range in technical terms. So trading range is a choppy market where it gets too cheap, people buy it, it gets too expensive, people sell it. And the point where people think it's too expensive and too cheap keeps getting thinner and thinner and thinner and thinner, which is why it makes the triangle pattern. It's not because it's magic. And then if there's a strong imbalance under the surface between buyers and sellers, it'll break out early. It'll do that right here, or here. If it was really strong, it would have done that. So by the time it gets to this point, we have a really strong probability of whipsaw. So usually you can say that the first direction is wrong, and it went first direction wrong, second direction wrong, third direction. 3 days later, we're back where we started. So the real situation is we're in a very complex trading range, absolutely no edge price action wise. Now, in a trading range, where do you have an edge? You have an edge at the bottom, and you have an edge at the top. In the middle, you got zero chance, like zero chance of picking this shit. So you can improve your discretionary trading results out of sight by asking yourself before you get into a trade, is it a trading range or is it a trend? If it's a trading range, do I have any business being in this fucking place? Because in the middle of trading ranges looks like very tempting to get in all the time. Like look at this shit right here. Who thinks this looks like a tempting buy setup?
Yeah, I mean, you've got that spike low, so there's clues that are flying around. There's
a spike low, a higher close, a lower close, a retest, a little hammer afterwards. It's not the worst one you've ever seen, right? Like if you're sitting there on a Saturday morning thinking, wow, I'd love to take a trade, that one would probably jump. You should not take that. This is one where you just got no clue, like no clue at all. Whereas compare and contrast with something a little higher, like up here, and you can see that the setups actually, work a little bit. Okay.
I mean, just putting on, just drawing any kind of estimation of a line at the top or the bottom.
Yeah, and so you don't want to be exact with this because there's nothing magical about a rectangle, right? Like it's more like trading ranges can be weird shapes. They can be all kinds of weird shapes. They can be wedges. They can be expanding, megaphone, bullshitties. And they're those different shapes for different reasons, which we can cover. But I mean, you look at this one, short-term trading range. Yeah, I wouldn't touch that either. I wouldn't touch that either. Okay, so Ethereum, Bitcoin. We've got Ethereum's been strong all week, but it looks like it's running out of steam here. Ethereum USD, stronger than Bitcoin all week, but looks like it's running out of steam. That looks to be pretty much completed there. Let's look at this. Let's look at the rest of the altcoin universe and see what's been moving.
There's so many bag holders that if you get any kind of a pump, the selling pressure then just comes boom, and it's over.
That's what bag holders are, right? Okay, so Ethereum here, we've got the vast majority of alts underperformed Ethereum this week, which is interesting because that was not the case last week. What have we got at the top? We've got Litecoin, Ant, Decred, Link, Near, outperforming it. Bit of a mixed bag. I mean, you know, if you thought on last week's call that Litecoin was going to be the #1 performing altcoin this week, fucking have a go, you know, like I'm certain that opinion was not backed up, was not expressed. I'm certain no one got that one right. Let's look at some Glassnode stuff. Okay, let's start with non-zero balances. Zoom in a little bit. Okay, you can see that we had a little bit of a dip. So before the last little fuckery, we got a little bit of a dip. And before this bit of fuckery, we got a little bit of a dip too. That is not made fresh highs yet. So this is still weak. Until this is at fresh highs, fundamentally, this is a little bit weak. Now let's look at supply held by balances with. And let's just change this down to 1 hour. See if there's anything happening right now. Okay, so I'll zoom that out a little bit. And I'll put just an SMA on it to make it easier to read. Actually, let me get this into it. Okay, so what I've done is I've smoothed out the I've made a 1 hour resolution and then smoothed it out so it's easy to see. And you can see that as we found this support here, there was some weakness in this before it all fell to shit. There was some weakness in this before it all fell to shit. We've got some weakness here that hasn't really recovered. This is very weak. Let's look at the NUPL, and I don't want moving averages. Everyone's back into negative 0.6. The average trader is underwater now. Let's look at exchange balances. Okay, very interesting. Let's drop this down. Okay, before people start selling off, they have to transfer their coins to exchanges. So the canary in the coal mine is before any sort of crash. You can see we had a crash here. Before any sort of crash, look at what we had. Before this sort of crash, we had a little bit of moving on exchange. Here we've got, this is very ominous. Coins moving on exchange are people getting ready to mash the buy button. Yeah, this is crash warning stuff. Okay. minor unspent supply. Miners are holding off, mildly bullish. Let's look at the hodler net position change. Just make this a daily chart. Okay, so in the last week, hodlers are reducing their positions slightly, but still adding. It's good. Nothing in the short term there. Yeah, this one I think is broken. I think that's clear non-stationarity. Okay, crypto margin futures open interest is dropping. Okay. Well, crypto traders know something's up. Let's look at the funding rate. This is probably where it lives or dies, right? Okay, let's zoom in. Okay, we had positive rate, it went down, negative rate, it went up, positive rate, it went down, negative rate, probably going to try and go up first and sucker some more dip buyers in. So let's look at that one more time. So what the funding rate is telling us is that the highest probability is this, which is really the max paying trade. If you think about it, the easiest trade here is for it just to fall straight off the plate. The trade that fucks everyone around is bulls thinking they're okay and then getting fucked. Let's look at the exchange inflow volume. Okay. We're starting to get some spikes, but nothing. Let's look at it on a daily, it'll be easier to read. We're starting to get some spikes of inflow, but nothing like too extreme. Let's look at everything all at once. It's nothing too extreme there. So we're probably not looking at a crash today, but we're just looking at a very weak market. Spike. Okay, so what we're looking to say that this is over is a reasonable size spike here. You can see that tops usually happen with a big amount of people pulling out of exchanges, tops, and this did not look like a top. This was the one. This was why it fooled us, because it was really just the Fed changing their mind, and it didn't look on chain like there was anything changed. It looked very bullish on chain. Whale deposits to exchange, nothing of note there. So on balance, looks like a weak market. from a price action point of view, it is highly unlikely that it would stop there and not at least get to there. This is probably the minimum point where you would say it's going to stop. If you think it's going to stop here and just reverse, I don't think so, honestly. So this would be a very low probability stop point. This is probably the minimum back in the real world reasonable point that we can expect. So the highest probability probably looks like that. And then here we decide, does it go through, scare everyone in the bear market? If it stops here, it's bad for us because for a start, it confirms that we're in a trading range. What do we know about trading ranges? They're really hard to trade and they're really boring and they really suck. And they last for a long time. So if we stop here, it means that we're probably in a trading range for at least another month. I don't know how you guys feel about that. I feel like that would be shit. If we drop down, scare everyone, fucking happy days are here again. Ian, you said there was some price action stuff you wanted me to talk about. What in particular you want me to talk about? Channels?
No, I'm thinking more of a sort of macro perspective of like the DYOR. So it's like, let's just pick a random coin, say NIA. You know, it's like first I'd look at the fundamentals of the company itself, or would you first look at the price action of NIA and then look at the fundamentals?
Okay, so you want to do it top down. So what you want to do is look at the whole market. What are you trying to do? You're trying to buy coins with the best prospects in a bull market, in a bull run, when there's a bull run or when there's about to be a bull run, right?
Yep.
So first of all, we look at the bull market, we look at the whole market and we go, okay, is it time to buy? Well, not according to Bitcoin yet. And if Bitcoin crashes, what's that likely to do to alts? They could really take a dump. So that is the first thing that I would look at. The second thing I would look at is the sectors. Okay, so time frame we're looking at. Let's look at from 16th of June. So what's been going on here? DeFi slightly outperforming the orange ones, which are the exchange coins. NIA and FTM is the new school layer ones, third, and metaverse is in the toilet. So your metaverse is the weakest sector. DeFi is the strongest sector there. Let's look at it since about here, which is when the market took a dump. Okay, during the dump, predictably exchange coins held up best. Nearest layer one still third place. DeFi is doing surprisingly well compared to those other sectors. So the first thing is this a sector that I want to invest in? I'd say not the worst, not the best, medium grade. If it is in a sector, what do I want to do? So let's load up. Let's change that to a line and let's AVAX, what's some other layer ones? ADA and Ethereum, obviously. Let's change that to a 1 hourly chart. And okay, and then go to major lows and start looking. So near, strongest off the lows are the layer ones. In a weakening period was in the middle of the pack, not too bad. And from June 13, which was our lows, second biggest. So what do we want to do? We want to go long the strongest layer one sector, and FTM was slightly above it since then, but not too bad. Okay, now we can go back to NIA and start to look first at the Bitcoin price action. And I would do this the other way around. I would look from monthly chart back out, and I would do it against BTC first and then against USDT. So you can see clearly we have no sign of a completed bottoming signal, but we're probably going to get a down month, and then that will probably be a completed RTV, right? So my initial gut feeling is that this is a choppy chart to read with lots of big upper and lower wicks, and we have no sign of a confirmed bottom. This is one that's on a watch list that you're not looking to jump in and buy. Weekly chart, we've seen a confirmed bottom here, and it's rising, and we've got a potential interim top here. So we've got mixed evidence. We've got evidence of a bottom, and we've got evidence that that bottom is playing out towards the end of that run. Let's look at a daily chart. We've got evidence of the bottom of this run, and that looks a little bit ominous, and you wouldn't want to pick a direction with such a clean move to the downside there. I certainly couldn't say that this is not under threat. I couldn't rule this out. So this is the type of coin that would go on your watch list. When are you trying to buy a coin like this on capitulation? When would you know that it's safe to buy? You should be seeing the winning alts of the next run start to make a move fractionally before the other stuff. So you should start to see NEO break away from the pack if it's going to be the one. This is overall, I would say this is not ready, like just not ready. Does that make sense?
It does, yeah. I mean, this just looks like it doesn't know what it's doing. If it's going to come back down and test that low, and then
okay. So what you said there, it doesn't know what it's doing. That's exactly right. Why? Because crypto is in the thrall of the stock market. The stock market's in the thrall of whatever the Federal Reserve guy opens his mouth and says on any given day. Altcoins are in the thrall of Ethereum in their merge. And people are waiting for a crash that hasn't come yet. And some people are dip buying, thinking that the worst is over. So we've got a lot of cross currents. So we really do have a market that doesn't know what it wants to do, that could do a number of different things. So when you've got a market that you've got a lot of evidence that there's a lot of different possibilities, what you really have to do is, there's a thing in our brains where we're often wrong, but we're rarely unsure, right? So if you look at a chart, even if you're wrong, you'll feel fairly good about whatever prediction it is that you're making, right?
Mm-hmm.
When you've got a lot of evidence that there's a lot of multiple different ways this could go, you need to tone down your internal believability on yourself, right? Like if what you think is, if I think, like I look at that chart and I think, oh, that's a bit shady, it's probably going to get down to at least here. And I'd say that probably has about a 55% probability. I'm probably just full of shit. Whatever you think when there's too many probabilities is probably wrong. And you probably shouldn't. If you notice, when I make public predictions, it's only when things are really extreme, like when there's a million different ways it can go. I never say this is going to happen, because it always makes me look stupid. And that's kind of the way that you should be thinking too.
Well, yeah, it's like breakouts, it's like I don't know what the exact statistic is, but I don't know, 85% of breakouts, they fail. And then to get a trend to actually go off to the moon, you've got to have buyers that are on the sidelines that didn't get in, that want to get in. And I just don't think those buyers are there at the moment. There's just those bag holders that are just up at that, whatever that next support and resistance is, that are just, please get up here so I can dump.
Breakouts work really, really well in the final stage of a bull market when everything's pumping and there's huge FOMO, and people see the breakout and they have to FOMO in because they know it's going to double in the next week. And if they don't get in now, they've missed the boat. Breakouts are a thing that work, that they go up to 80% accuracy towards the end of an alt season. But overall, they sit at about 28% accuracy, depending on the breakout level.
So that's why the AWC scoops up so much towards the end.
Yeah, because it only becomes reliable at the end, because you know what we're working on is people's panic reactions. I can't tell which altcoin people are going to buy today, but you know, if we fast forward it 6 months, we've got an alt season, we've got a big bull market, and near breaks out ahead of the pack. We've got, you know, like a 90% chance that a breakout is going to be like, oh fuck, that's going to be a pump. You know what I mean? Like whereas today, if we do that same thing, like we've got fuck all chance of getting it right.
No, not at all. I mean, there's maybe some like small 4% scalps when you're in these trending ranges.
You don't want to do it, dude.
That's, you know, that's a lot of work for.
That's a lot of noise trading. You know, the big money is in the big swing. So if you fundamentally look at this, what did we have? We did have a trading range. We did have a trading range here. It's tried to break out. That breakout has failed. Maybe we've got another trading range. Maybe we've got a series of lower highs and lower lows. Maybe we haven't. There's just too many maybes to be playing this game. You have to be really willing to say, I don't know. So let's look at. So this is the USD tether chart. And let's look at it. You know, what does that tell you?
Well, so look, I mean, if we go back to that 2021 and we look at that series of 5 bars that goes up very clean, open at the highs.
Yeah.
You know, wonderful. And then we got a good sell-off there, which is to be expected. I think we got.
So let's dig into that. So we have the move off the lows. We have a series of unbroken months where each low couldn't break the low of the previous months. Even this one couldn't break the low of that. So that's 1, 2, 3, 4, 5 months. When you see that, you ought reasonably expect that the next dip would be bought, right?
Mm-hmm.
That's fair play. When you see sign that the next dip is being bought, you probably want to pile in on that. What is the number one sign that the dip is being bought? Is that we break a bar high right here.
Mm-hmm.
This is your buy point. What are we seeing here? We broke old highs, and nothing as bullish as all-time highs. We're still not breaking monthly bar lows. We break the first one, but it closes higher. So this is the first outside monthly bar. An outside monthly bar is a sign of instability. Instability means that the shorts had to go and got fucked, and the longs got stopped out, so they didn't participate in this. So we're starting to get new, fresh players. We just slotted some paper hands in there. And then we've got instability followed by RTV sell and a dip. Have we got any sign that this down move is over?
Well, we've got that doji candle, which is doing something different than what we would expect. Like we could expect that single bull bar pullback, but then carry on with the downward trend.
Okay, so this isn't a doji, this is a shooting star. This is a failed attempt to drive the market up. So this is dip buyers getting in and feeling very nervous. So the reason a shooting star works is because dip buyers, people who bought in this candle, are weak hands, right? If they don't get what they wanted, which is this, inside 2 or 3 bars, they're going to jump. Where is the obvious point for them to place their stops? Somewhere around here. So if we get a move below here, we've got some weakness. Have we got an RTV or any sort of confirmed buy signal yet? Not yet. So we've got no real reason to be jumping in long. We've got potential reasons that it could still keep going down. The thing that we want to watch is this structure. Where does this stop? Does it stop above or below this thing? If we come down here and we break this line, kind of changes things, right? If we leave the structure intact and do say this, you zoom out and it's all going to be happy days again once we get above here. And it's a nice big bullish thing. I mean, it's showing potential for one of the ones in the next run, but it's just too early to jump. And the thing you have to notice is that the reason Bitcoin went down faster than other shit in the recent crashes is because it was being forced collateral sold and it was the only thing that was saleable. So people sell the saleable assets first, and NEAR isn't an illiquid shit coin. It's a reasonably liquid coin. So yeah, I wouldn't be jumping in yet. Let's look at it on a monthly chart. You can see we've got signs of a bottom and we've got potential signs of a top. So this one could go either. So it's like really it could go either way. You probably don't have any business betting on it. Could go up, certainly could go up, but you wouldn't have any business betting on it. And I would think that whether or not it goes up or down is not about this chart, but more about the whole market as a whole, viewed in context with the interest rates and the J Powell and the stock market and the whole bit all balled together. I wouldn't have thought that it's going to come down to one nice, easy thing, you know?
No, there's too much going on. But just at the end of that weekly chart there, so that's an RTV pattern there, isn't it? Is that it's
yeah,
weird.
it's an RTV sell after an RTV buy. Like it's pretty usual. You know, it's pretty usual stuff. You know, it's quite common to see RTC, RTV. It's quite common to see these bookending for long periods of time. You can see that this was the RTV sell, RTV buy, RTV sell, RTV buy, RTV sell. RTV.
Nice. Yeah, no, I don't think there's anything is gonna happen with these. This is just training for the bull market, isn't it? Because when the bull market starts, there is no sleep, and you've got to be ready. But
well, the big money is from the, let's just look at Woo quickly. I know it's one that you're always interested in. Let's look at the daily chart. Okay, so where are we now? We're about 15 cents. You're betting that it finds a bottom before it goes to here. Below here, it's got to cause some problems. Geez, it's a hell of a buy where it is now. At 15 cents, it's a hell of a buy. That's all I've got to say about that thing.
Yeah, it's interesting because I lay it in, like I got some stuff like as low as like 0.05, and I did scratch my head a bit and thought, well, it is on sale for 15, and that is quite cheap.
Yeah, I think we'll get it cheaper. You know, you've got to realize if we do get a crash event, shit is going to get really ugly. Ben, any Ethereum Bitcoin makes a good point about the merge. Price action is telling us that people bought the merge. It's kind of running out of steam. Could go either way. Above here, merge success. Below here, merge. I don't know. It's entirely possible the merge is a success and it goes down. It's been bought really heavily. It's a news event. Fuck, I don't know. There's the best article on it that I read was by Arthur Hayes, the guy who owns BitMEX, who's one of the smartest guys in crypto. I recommend you look up him. He's got a Medium article and he talks about the probabilities of it working or not working. I think the merger is probably going to work for reasons that probably aren't really valid. Like, I just think it's probably going to work. Ben, do you have any thoughts on the Ethereum merge?
You're unmuted, Ben.
G'day, Scott. No, like I'm no tech expert, but from what I've read, it seems to be going on track, and it's been in progress for that many years, and they've dotted all their I's and crossed all their T's. So it seems on track. But I think, like you said, the market's sort of somewhat positioned, but they're somewhat neutral as a result of the stock market declines. So, but I'm thinking there could be a bit of a FOMO rally and a break of that Ethereum Bitcoin high temporarily.
Could well be,
but it could be all over the place.
Yeah, I wouldn't think that would be particularly smart betting either way. I think maybe it was smart to bet way back here at the bottom of the trading range. Yeah, almost by definition, breakouts are a low probability play. They become higher the longer the trading range goes on, and this trading range has been going on since May 21. So there's some argument for a breakout working. You know, there's an easier fight down the street is the way, you know, there's probably an easier trade somewhere than this.
Yep.
Yeah, I probably wouldn't feel the need to take a position. Has anyone else got anything else they want to talk about, want me to look at? Anything at all before we go?
Just one other thing, if you don't mind. Someone sent me some articles about a breakaway, the Bitcoin fork back in the day. There's another, I think it's BS.
BSV, the scam fork.
Yeah. Some guy saying it's got all this superior transaction speed, but then
those guys are fucking frauds, dude. They don't know shit. You look at the clown car of people involved in that. One's a fucking pedophile living in Antigua, like a legit straight up I bang 12-year-old guy. Another's Craig Wright, who's been claiming for years to be Satoshi when he's not fucking Satoshi. And you can tell who's fake because, you know, real ones don't dress like Monopoly Man with 3-piece suits and a fucking monocle and shit like that. Like that's usually your first clue that the guy's pretending to be something that he's not, that he's dressing like a 19th century Victorian gentleman, and pretending to be Satoshi, and he can't actually code. And you know, there's just numerous lawsuits where the judges just say, you're full of shit, mate. So if he's Satoshi and that's the real Bitcoin, you know, I'm a post-op transsexual and you only really have to look at the price chart. Let's look at it against Bitcoin. This is a monthly chart against Bitcoin. So this is when they launched their shit.
You got to share again, mate.
Oh, sorry. Yeah, it's just a terrible thing. It's not listed on any major exchanges. The only one it's listed on is Bitfinex. The only people who are mining it are people in this little cabal of like, he's the real Satoshi. Like, this shit just not going to make it. Not a million years is it going to make it. And even if he was Satoshi, he's just pissed off. Like, imagine this is the 2020 bull run, right? Look how well they did. From like, while everyone else was making money, they just, you know, you have to be pretty fucked to lose money in early 2021. Like, you really have to be shit. And they are shit. Like 100% shit. The reason their shit works so well is because no one else uses it. Like, the only people using it are the little, you know, the half a dozen people who are all connected to the same company and doing it privately. That's why it works well. It's because no one using a shitty off-brand fucking Kmart blockchain.
Okay, thanks for that, Scott. Yeah, it's just a friend of mine went to an hour-long lecture.
Oh god, they're always holding this. It's the real Bitcoin. This is Satoshi's vision. The other ones, like, Like, you know what? It's really easy to prove that you're Satoshi. You just move a coin. Like if you own that wallet, you can just move a coin, and then it's like indisputable. I moved a coin. I put a message in the blockchain. Therefore, and you've got this complicated thing like, oh, I put it in this trust, so I can't touch it, and legally I couldn't. Oh, fuck off, mate. You know, honestly, fuck off, mate. Like, if you expect me to believe that you're saying that you're Satoshi and you can't move coins out of Satoshi's wallet, which is well known, and you weren't involved in crypto at the time, and you're not rich, and you dress like Monopoly guy, and you're associated with a bunch of fucking third-rate obvious fraud men, like, nah, fuck off, buddy. That's the way I feel about that.
On that note, should we call it?
Let's call it. All right, guys.
Cheers, everyone. Ta-da.